Good afternoon, ladies and gentlemen, and welcome to the most exciting part of any annual general meeting, the Finance Update. My name's Neil Atkinson, I'm the Director of Finance, and I have the pleasure of accompanying you through the next few slides. Just before we move through the formal slides, I just wanted to take the opportunity to provide some context. As you will no doubt all be aware, the year of 2020-21 was the year of COVID, and with it brought unprecedented challenges to the NHS. The world of finance was also similarly impacted, and during that year, the NHS finance regime was altered and we were introduced to new funding arrangements, some of which you will see as we move through these slides. It is a mandatory requirement for all NHS organisations to have an external auditor. The external auditor plays a key and pivotal role and provides an independent opinion on whether the Trust's financial statements reflect accurately the business transactions that have undertaken in that year. The external auditor also ensures that we follow all of the accounting policies and we fulfil the requirements of the National Health Service Act 2006. During this year, the Trust selected and appointed new auditors. This was done in conjunction with the Council of Governors, and we successfully appointed Deloitte LLP. Deloitte undertook the external audit review of the Trust account for 2021. I'm delighted to say that the group accounts received an unqualified opinion from Deloitte and give a true and fair view of the business activities, operations of the Trust. It's important to note that the reported position within the accounts is a consolidated position, and as a result it includes the Trust charitable funds and its two subsidiaries, Optimus Health Limited and North Tees and Hartlepool Solutions. The overall income and expenditure position of the group was a total surplus of £8.8 million. Now this position did include a number of exceptional items which I will address later on in the presentation. So despite this being a very challenging financial year with new arrangements in place, the Trust was very successful in delivering a surplus, and with that was able to continue to invest in patient care, its site and its infrastructure. As part of this investment, the Trust set itself an ambitious capital programme in 2020-21 and in that year spent over £23 million on capital expenditure. This was largely spent in four areas. The biggest beneficiary of that capital programme was the estate, and this was maintaining the estate not only for the patients but for our staff. £8 million was spent on medical equipment and donated assets. A further £5 million was spent in relation to information and technology services, and finally over £1.1 million was spent on COVID-19 funded items, and that is ensuring that we had an appropriate oxygen supply for our patients and that we could segregate patients appropriately. The slide that you have on screen now is an extract of the financial position from 2020-21. It's important to know that this is a consolidated position and we've included the previous financial year as a comparator. I'm delighted to say that the in-year operational performance of the Trust resulted in a £9.7 million surplus. This was then further adjusted through four technical adjustments shown on screen. This resulted in an adjusted surplus of £8.8 million, which was a really positive position. The slide that you have on screen now is one of the key primary statements within the accounts. It's the Statement of Comprehensive Income, or the SOCI as it's known. Again, this is a consolidated position, so it includes the benefit of the Trust's charitable funds and also the two subsidiaries. It also includes the technical adjustments we discussed in the previous slide. By way of comparison, the previous financial year is included. This slide gives a feel for the level of operating income the Trust received in year, which is around £368 million, and the level of operating expenses, which is just under £358 million. The overall adjusted surplus again results in the £8.8 million. The final point I would note on this slide is the significant increase in both income and expenditure from one year to the next, this related exclusively to the impact of COVID. This slide shows the operating income that the Trust received in respect of patient care. From the graph you can see quite clearly that the majority of the income the Trust received was from the CCGs. This is largely made up of two CCGs, Tees Valley CCG, which accounted for 84% of the 275 million, and County Durham and Darlington, which accounted for the final 15%. The Trust did receive additional income from NHS England, which was £41.5 million. This related to national screening, community dental and specialist commissioning, including chemotherapy. This slide shows the other operating income the Trust received in 2020-21. As you can see from the slide, there's a variety of income sources. However, the two that I would like to bring to your attention is the money the Trust received in respect of COVID. This included PPE, decontamination, testing and the COVID vaccine. The other element is education, and that included junior doctors, undergraduate training and workforce training. This slide shows the operating expenses of the Trust. As you can see from the pie chart in the table, the biggest spend area to the Trust is staff costs, which account for 65% of the overall operating expenditure. Other key areas to note is the clinical supplies and services, which account for 28 million, and drug costs, which account for a further 20 million pounds. This slide is showing again another one of the key primary statements for the Trust. This is the statement of the financial position, and this is the assets element of it. This historically was always known as the balance sheet. As you can see, it's a consolidated position, and again, the previous year is included as a comparator. This gives you an indication of the assets the Trust currently holds, and you can see the improvement in the position from one year to the next. A couple of notable mentions is stock has increased from 5 million to 6 million. That's largely down to an increase of the PPE stock holding, and receivables, which is money that is owed to the Trust, has reduced quite significantly from 17 million to just under 12 million pound. The cash position has again improved from 17 million to 54 million pound in the financial year. This slide shows the Trust's liabilities and is the other half of the statement of financial position. As you can see, the total current liabilities for the Trust has increased significantly over the position last year. There are a couple of reasons for this. Firstly, the impact of COVID has resulted in staff not being able to take annual leave in normal ways, and as a result the Trust has made a provision. And secondly, the Trust has also made a provision for ongoing national legal cases such as flowers in its position. This slide shows an extract from the statement of cash flow, which is another key primary statement within the accounts. As you can see from the slide, the cash position of the Trust has improved significantly from 17 million to just under 54 million, an improvement of 37 million pounds. As part of the ongoing review of the accounts, Deloitte also undertook a value for money review to ensure that the Trust was able to secure economy, efficiency and effectiveness in the use of its resources. This was a new addition to the work plan in 2021. I'm delighted to say that Deloitte didn't identify any significant weakness in the Trust's arrangements, and as a result no recommendations were raised in the formal report. This demonstrated a robust internal governance and control environment. So to conclude, despite the many challenges of COVID-19, the Trust has had another successful year and has continued to improve its financial position. This has all been achieved without impacting detrimentally on patient safety or quality of care. Indeed, the Trust has continued to invest in vital infrastructure, IT and medical equipment as part of its ambitious capital programme, spending over £23 million in the last financial year. The Trust understands the need to maintain positive working relationships not only with its commissioners, but with the stakeholders from the local health and social care. And this is all to ensure that resources are used for the best benefit of patients. And finally, the Trust is proactively engaged and contributes significantly to the integrated care system. I hope you've enjoyed the finance update as part of the annual general meeting. I'd like to take this opportunity to thank everybody for their contribution to achieving this positive position, and a big thank you for the finance team who have worked tirelessly throughout the last 12 months.